All right, folks, let's dive into something that is on everyone's mind, taxes in the upcoming presidential election. I know, taxes may not sound like the most thrilling topic, but stick with me because it can impact your wallet in a big way. Both President Trump and Vice President Harris have been laying out their tax plans as the election heats up. And it's important for investors to keep a cool head while the political storm swirls around us. We all know it's just crazy out there. But here's the deal. One big debate is over the future of the Tax Cut and Jobs Act. Both candidates have very different ideas on where that should go. But remember, these proposals are like the weather, constantly changing, so we're just going to hit the highlights today. And hey, when it comes to taxes and financial planning, don't go it alone. It is always smart to have a trusted advisor in your corner to help you navigate it all. So over the next few minutes, we'll cover the biggest tax ideas being tossed around by both candidates. So grab your popcorn, buckle up, because taxes just get a little bit more interesting. All right, let's take a quick trip through history with this chart, which tracks the highest marginal tax rate for individuals and corporations over the last century. Now, I know tax charts don't scream fun, but bear with me, it gets interesting. Here's the takeaway. Today's tax rates are actually pretty low compared to the past. Believe it or not, during World War II, the top individual tax rate hit a whopping 94%. Imagine Uncle Sam taking that much of your paycheck. Yikes. Taxes have always been wrapped up in politics, reflecting the constant push and pull from ideologies. While taxes can hit our wallets and businesses directly, the bigger picture is a bit trickier. Taxes don't always have a clear-cut effects on the economy that you might expect. Here's why. When taxes go up or down, people and businesses don't just sit back and take it. They change their strategies. They tap into deductions, credits, and all kinds of loopholes to lower their tax bill. Who likes paying a lot in taxes, right? That's why lower taxes don't automatically lead to booming markets, and higher taxes don't always mean doom and gloom. So when you hear people predicting the sky will fall because of a tax change, take a deep breath. The real world is a lot more complicated, and that's what makes investing so interesting. Now we're talking about something that affects all of us, federal debt. This chart shows how federal debt as a percentage of GDP has been climbing over the past decade. Now, I know charts about debt may not sound thrilling, but trust me, this stuff matters. First, here's a quick breakdown. The net federal debt means the government's IOUs, but it excludes debt the government owes itself. Yeah, it's that twisted and complicated. The blue dotted line represents the 50-year average of net debt, and the red line marks the 100% of GDP threshold. Spoiler alert, debt has been creeping upward for a while now. So why should you care? Many economists think we might see tax hikes in the future to help manage this growing debt pile. After all, somebody's going to pay for it. Sorry, Bo and Caroline. Now, let's talk taxes. Back in 2017, the Tax Cuts and Jobs Act slashed both individual and corporate taxes, which was a big deal. Fast forward to 2022, and we get the Inflation Reduction Act, which brought in new taxes on large corporations and stock buybacks. So it's been a bit of a roller coaster. Looking ahead to the 24 election, we get two very different tax plans on the table. President Trump is all about slashing corporate tax down to 15% for some companies, while Vice President Harris wants to raise it to 28%. When it comes to individual taxes, Trump is looking to keep things as they are, but Harris wants to take the top rate back up to 39.6. And there's more. Harris has some interesting ideas like taxing unrealized capital gains for those with over $100 million in net worth. Yeah, that's a kind of a big net worth. But she also is proposing support for first-time homebuyers and expanding deductions for startups. Meanwhile, both candidates are on board with things like enhanced child tax credits and nixing taxes on tips. So there's something we can all get behind. In short, taxes are always a moving target. And as investors, it's important to stay informed on these proposals because they can have a real impact on your financial future. All right, let's close with this cool chart that shows the steady growth of the U.S. economy since 1947. We've got presidents and their parties labeled, and you'll notice some colorful patterns going on. Plus those blue shaded bars, they're the recessions, those little hiccups that come along the way. But the big takeaway here is that regardless of who's in the White House, the economy has kept growing. So no need to panic every election cycle. Why? Well, business cycles are influenced by all sorts of things way behind just political parties. While the tax proposals from each candidate, whether it's cuts or hikes, can have real effect on both individuals and businesses, they're not the sole drivers of the market. So here's the bottom line. Don't let election drama make you lose sight of your long-term financial goals. Campaign trail promises change faster than fashion trends. Instead of reacting to headline, focus on what you can control, like working with your trusted advisor. Shameless plug. But most importantly, keeping your eye on the big picture. In short, election season is exciting, but don't let it throw you off track. The market's been through it all before, and it's kept moving forward.